Hello, FYE Finance family. Welcome to Flip It with Samara, a show designed to flip the narrative on how we view and use tax planning or the power of tax planning in both our personal and business lives, right? So here on Flip It, we have created a safe place for you to learn, to ask questions, to share your experiences. So we want you to be engaged. In fact, we encourage it. So please make sure that you are asking questions, you are sharing your experiences as we share these tax tips on tonight. So we stand by that notion, right? That the wealthy do not start tax planning once they become wealthy, but rather use tax planning as a tool to immense their wealth, to grow their wealth. So we definitely want to encourage you and let you know that you can start tax planning no matter where you are in your financial journey. Tax planning is for everyone. So with that mindset, before the end of the show, we're definitely going to give you some information so that you can connect with us so that you can start your tax planning journey today. Right. So because this is an engaged audience and our FYE Finance family definitely lets us know that they're out there week over week, we're going to encourage you to do so right now. So let me know that you are rocking with us. Say hello, give me a wave or something to let me know that you are here in the chat tonight. I see we have Angelica. Hello, Angelica. We also have Samurai and Wayne Andrews. What's good, FYE family? Hello. Thank y'all all for joining us tonight. So, I know that you saw the topic for tonight, show me your assets, right? And I wanted to do a little subtopic to that, show me your assets, and I'll show you some tax savings. So tonight we're going to be talking about assets, and then we're going to be talking about how you can tax plan with the assets that you have. And tonight's show is going to be a little different than what you've been hearing here recently. We've been talking about business, or we've been gearing our show towards business owners. But tonight we're definitely going to give something to our individual taxpayers as well, right? So we definitely want to make sure that you are covered, individual taxpayers, people who may not own a business as of yet. We want to give you a little love tonight as well. So in keeping with our theme for the month of July, in case you did not know, our theme for the month of July is assets, right? So we're going to be talking about assets and, how you can utilize them, how you can leverage them, what an asset is throughout the entire month. And so this week I'm solo, but next week I am going to start with a round of guests that will be appearing throughout the month talking about assets from their perspective. So they're definitely going to share with you some tips and some strategies that either they personally have used or that they have implemented for their clients. So make sure that you stay connected to us so that you can get those tips and strategies yourselves and probably connect with one of the expert panelists that we're going to have on the show week over week, right? So without further ado, I'm going to jump right into it. Y'all, tonight, I need y'all to be engaging in these comments. It's just me. Y'all got me all to yourselves. So take advantage of it, right? Ask me those questions. Make sure that you're showing some love in the comments so I know that I have you and that you are engaged throughout the show, right? So show me your assets. There was a movie years ago called Jerry Maguire, right? And when in this movie there was an agent who was Tom Cruise, and then there was an athlete by the name of Cuba Gooding Jr. That was the actor, I should say. He played the athlete, and whenever Tom Cruise came with a contract to Cuba Gooding Jr., he would reply, "Show me the money, Jerry." And so I thought that this was a fitting theme, right? Because of the name of the show tonight is Show Me Your Assets. So I said, "Show me your assets." And it's a meme with Tom Cruise shouting that, right? So I do want to, set the tone of what tonight is going to be, right? We're going to have some fun. Usually when we talk about things like accounting, tax planning, that's not usually something that people get excited about, but I do. So I wanted to make sure that that meme conveyed the excitement that I have about tonight's show so that I could get you pumped and get you excited about it as well, right? So let's start. Angelica says, show me your assets, right? So let's start with the first very simple definition of what an asset is, right? So an asset is something that has value, right? That's the most simplistic definition that I can give you. So when you think about that, since an asset has value, there are going to be like fluctuations in the value, right? So an asset can appreciate or it can depreciate. So when you talk about appreciation, that means that the asset is growing in value. The value goes up. When you talk about depreciation, that means the asset goes down in value. It goes down, it decreases, okay? So at the very simplest approach, just know that its asset is something with value, and the values can definitely fluctuate. Things like the market plays a big part on how your asset is valued, right? And we're definitely seeing that in today's market. Hey, Rochelle, thank you for joining. She is new to the FYE Finance family, so welcome, Rochelle. I thank you so much for joining. You're going to learn a lot tonight, lady. Okay, so just know that assets fluctuate in their value. Depreciation, appreciation, right? So then I want to talk about the main two types of assets. So assets are they come in different groups, but at the highest level we have what we call intangible assets, and then we have what we call tangible assets. So when we talk about intangible assets, we're talking about things like your brand, right? So you see here on this screen, I have the FYE Finance logo. Your logo is an intangible asset. It's what we call intellectual property. So not an asset that you can physically touch, but it definitely carries value. It has worth. So your brand is an asset, right? Your logo is an asset. You see, I have these copyright I guess icons, and then the trademark icon. That's how you protect your brand. That's how you protect your logo. If you have an invention, right, you would protect it through a patent. So different things that are used to protect your assets can also be an asset in itself because it carries value, right? So just know that an intangible asset is something that you can't physically touch, but it still carries value. When you think about big brands like Amazon or Tesla, right? Let's stay at Tesla. So when people see the word Tesla or they hear the name Tesla, they associate a certain level of, I don't know, luxury, right, with that name because that brand has been established and it has worth. People are willing, right, to pay more for that brand. And so you have to understand that when we as small business owners are creating a brand, right, we should create it with that in mind. Not only does the services that we're providing have value, which is why we do that value exchange, right? You don't offer your services for free, there's payment that you collect. But also the brand that you are creating around the services you provide, that has value as well. So make sure that you are always operating in this sphere of excellence so that you can continue to grow the value of your brand, right? So that's some examples of some intangible assets. Then we have what we call tangible assets. Now, these are physical assets. These are things that you can touch, but they also have value, right? So when we think about tangible assets, you may think about your home or your car, if you have a computer. Those things are assets. If you think about it from a business perspective, manufacturing equipment, buildings, right? Those are all tangible assets. And the list goes on and on and on, but I just wanted to give you a few examples so you can kind of get the picture, right, of what a tangible asset is, right? So tangible assets are assets that you can physically touch and they also hold value, right? So their value fluctuates too, as we are seeing in this economy. So there's good and bad about this, right? I love that we're in a place right now where a lot of what I'm talking about is very relative and you can see it in real life because the economy is doing some crazy things that we haven't seen probably in, call it 12 years now, maybe been more than that. um, it's easy to relate some of these examples to what I'm going to talk about. So when we talk about the fluctuation, right, of the value, you say you purchased a home 10 years ago. I know when we purchased our home, it was about 10 years ago. And our home carried a certain value 10 years ago. Now, that's when the market was just recovering in the state of Georgia. And so the value of our home was a lot less than what it is now. So, what we're experiencing now is appreciation in the value of our home, because now our home has almost doubled in its value. Actually, it did double in the value for which we paid for it, what we purchased it at, the purchase price that we bought this home at. It has now doubled in that value, right? And so we know that this is why we call this market right now a seller's market, meaning that the seller is going to get more of a benefit in the value exchange that's going to happen at the closing table. Okay. So it's a seller's market because home values are appreciating right now, right? Same thing with your car. So if you look at a car maybe that you purchased a year or two ago, when you purchased that car, and this is what's crazy, this phenomenon is like crazy to me right now. Usually when you purchase a car, you roll that car off the lot, it depreciates in value instantly. I mean, you roll it off the lot, it's going down in value. That's just what happens with cars, right? But now what we're seeing is cars are maintaining their value for longer periods of time, especially used cars. And a lot of factors are playing a part in that, mainly because, or I shouldn't say mainly, but I know one big factor is that automotive makers can't get the parts that they need to build new cars. So guess what's happening? The old cars are selling because people still need cars, right? And so people are selling some cars maybe that they don't need, or maybe the ones that happen to get their hand on a new one, they want to get rid of their old one, so they're selling those. But the car values are increasing. So some people are really benefiting from this moment, not only with their home, but also with selling their car because it's maintaining its value. You probably can sell your car for more than what you own it right now. It's just crazy, right? So before I go further, because I know that was a lot, we got some questions. So I want to make sure that I address them. Samurai says, how do we judge when we have too much or too little assets? Ooh, so this reminds me of a song. I can't remember who sang it, but it's like never too much, never too much. Anyways, so your assets. So when you have too little or too much, it really is going to be a personal preference. I can't tell you what's too little and what's too much for you. It depends on what you're trying to do, right? So that's just with tax planning. You have to approach it on a personal level. There's no one size fit all. So there's no answer that I can tell you, Samurai, that is going to say, yes, you have too many. No, you don't have enough. It's really a tailored approach. Thank you, Rochelle. She said Luther Vandross. Yes, honey, never too much. Um, so with that being said, it really just depends on what you're trying to achieve, Samurai, and the time in which you're trying to achieve it as to what assets you should have in your portfolio. All right. So approach it in that way. And that's why it's good to connect with someone in like a financial planning profession. Maybe your accountant can give you some insight as to like how to structure it for tax planning purposes. But Samurai says big Luther, not skinny Luther, right? But you definitely want to make sure that you are doing or having the assets that you need in your portfolio that are going to benefit what you're trying to achieve, right? So that's something you definitely have to sit down with a professional to get a good answer on that one. So I can't give you that answer tonight, unfortunately. Sorry about that, but hopefully that gets you on the right path. All right, then we have another question. So Wayne says, as a small business owner, Should we only buy tangible assets that can be written off? No, 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 no. So what you should do as a small business owner is understand when it's time for you to invest and when it's time for you not to invest. So that's why it's good to understand things like your budget, right? Understand things like capital, working capital. Sometimes maybe there's an asset that you're looking at getting, right? But right now, maybe you don't have enough capital to make that investment, right? And when you're talking about assets from an accounting aspect, let me tell you, there only so many assets that you can instantly write off because an asset is supposed to have natural depreciation, which means you write off a little bit of it over its useful life. So now y'all making me go put on my accounting hat for y'all tonight, but Wayne opened the door, so y'all blame him in the comments, all right? But I'm gonna take y'all to school a little bit. So when you talk about different assets from a business perspective, they have what we call a useful life. That is determined like how long the asset can be used before it's fully depreciated, right? Once the asset is fully depreciated, then that means that all of the depreciation expenses have been reduced against the profit and loss statement. So for small business owners, you have a profit and loss statement which shows the profit, and then the losses are the expenses that your business incurs every year. So let's say that you purchased a car for your business, and that car is $10,000. And so it has a useful life of 5 years. So every year for 5 years, you can write off what, $2,000, right? Until that car is fully depreciated. So on year one, you take 2,000, year two, you take 2,000, and so forth until the car is totally depreciated. That's how depreciation works with when you're talking about assets for a company. So definitely no, you can write off a portion of your depreciation, Wayne, but you shouldn't just invest in an asset just for the sake of saying, hey, I want to write it off, because you may not be able to take that full write off in the year you purchased it. Does that make sense? So that's why it's important to understand when to invest and understand if you have enough capital to make that investment, right? Because you want to make sure that you can still keep the lights on once you buy the car, okay? All right, so moving on, next question. Let's see. Rochelle has a question. She says, what is smart tax planning for a services business? Ooh, we can have some fun with this. Again, Rochelle, tax planning is a very tailored, very personalized approach. Some things that you can definitely consider is leveraging some of the assets that I mentioned as tangible assets, especially if you are using them already for the business. So that pushes us into the three questions, Rochelle, and I'm definitely going to address your question. So the next topic, right after we talked about asset types, is the three questions that we usually ask around our assets, and they all pertain to tax planning. So, Rochelle, this is going to answer your question. So, first, how do I protect my assets, right? This is all a part of tax planning, Rochelle. Protecting your assets is key. So, you can do that through properly structuring your assets or insurance, right, to protect your assets. So, when I look at it from a business perspective, Rochelle, we can structure our business in a manner in which we can leverage the assets that we have for the business better, right? So you've probably heard some accountants saying, oh, you need to become an S Corp. You got to become an S Corp. I don't tell everybody that, because S Corps aren't for everybody. Because one, there are certain eligibility requirements that you have to meet to become an S Corp and to maintain that election. And then two, becoming an S Corp may be too expensive for you depending on where you are in your business journey. So you definitely need to understand the benefits that structuring your company properly can bring, but you also need to understand the eligibility requirements as well. But definitely structuring your assets the right way could definitely give you a head start into tax planning in a smart way, Rochelle. Okay. Another question that I get is, how can I leverage my assets? So how can I use my assets to help me save money? So one way that you can do that is by simply looking at what you're using your assets for now, especially for my small business owners. So I'm gonna ask y'all some questions. Now this is good, and I'm gonna give you something for individuals that's gonna blow your mind. So by show of hands in the comment section, how many of you out there either own a home or own a car? And you are small business owners. Like, come on, give me some comments. Yes, some show of hands. And then I'm going to tell y'all 2 quick strategies that you may or may not have heard of. One of them I'm pretty sure you had not heard of. But so show of hands, you own a car or you own a home, right? So with those assets, just those 2 assets, that's just 2, you can definitely leverage those assets to start generating some tax savings. If you are a small business owner and you own your home and you are operating out of your home, there is something called the home office tax deduction, right? And so you can write off a portion of your home that you use to operate your business out of, right? And so when you are coming up with, hey, well, what all can I write off? Utilities, right? You need lights on. So that can be your lights, that can be your water, all the utilities that it takes to run your house, right? All of that is giving you comfort to operate out of your home. Your insurance, okay? Your mortgage interest, okay? Interest expense can be written off, y'all. So think about those things, parts of your property taxes. Think about those things when you're considering leveraging the assets that you have in order to take advantage of some tax deductions. All right. Vehicles. If you have a vehicle and you are using that vehicle for your business, right? Insurance again, maintenance for the vehicle, right? Gas for the vehicle, right? Interest, hello. If you have a car note, right, and you are paying interest on that car note, hey Kia, you can write off the interest. All right. So make sure that you are keeping track of all of the expenses throughout the year so that you can properly leverage your asset and write these things off. Guess what? If you're paying a lease, if you're making lease payments, you can write off your lease payments. Y'all welcome. Y'all welcome. So just 2 assets that you can use as small business owners that you can leverage to write things off, right? Individuals. This one blew my mind. Most of y'all said we have a house, right? Okay. So Angelica said she sold her house, but she got a car. So I gave you some car ones. Kia is here. I think I saw Rochelle say she has both. Samara says we have both too. Okay, perfect. If you have a house as an individual, y'all, according to the Internal Revenue Code, you are able to rent out your house for 14 days or less. It cannot exceed 14 days. Y'all listen to me when I say this. It cannot exceed 14 days. And you cannot be doing this as a business. This is like, hey, such and such coming to town. They want to rent out my house for the week. Here you go. All right. Got to be that type of agreement, right? 14 days or less, you can rent your home out. You can collect the income from that rent, and you don't have to claim it on your taxes. I'm not making this up. I couldn't believe it. Blew my mind, right? I was like, oh God. So just know that, y'all. There are absolutely a lot of ways that you can leverage the assets that you own in order to produce tax savings. And I just showed you how you can make money, right? That's tax-free income that you can have maybe for a vacation. I don't know, right? Use it at your discretion. All I am here to do is to share the gems, okay? Yes, Samurai, I am serious. Rochelle says, wow. Angelica says, that's good. Right. So leverage the assets that you have in order to put you in a position to take advantage of these tax savings, right? And so then after we talked about the leverage, then the next thing that people usually ask when they're talking about the tax strategies is, how can I grow them, right? How can I grow my assets? And so growing your assets is about investing, right? And so this is where I really encourage you to connect with someone who is in like the financial planning arena, because they're definitely going to be able to give you more guidance and a deeper dive into how those investments should be structured. Because when you are investing as an individual and when you are investing as a business owner, there's definitely some investments that are going to make sense for you, and then some that are not going to make sense. Maybe it's the wrong time, or maybe it's just not the right investment for you. So, for instance, I've talked about this before, but when we look at retirement planning, that is an investment. All right. So, that's an investment towards your future. What you're saying is, hey, you know what? I don't want to work forever, right? One day I want to be able to do what I want to do, call my own shots, wake up when I want to wake up, see the world. So I know that that means that I have to have money to do that, right? So you put money away for your future. That's what retirement planning is, okay? Making sure that you have money that will sustain your lifestyle, or the lifestyle that you want to create for yourself in your latter years. So with that being said, you have to understand that there are different types of retirement plans. And so with the different types of plans that are out there, guess what? All plans may not be for you. There's some that are going to be for you and some that will work better for others. That's why you have to connect with a financial professional that can help guide you with that. So when I look at tax planning, for retirement, I think of two things, right? Either I'm going to pay the tax now, and I love this because we had a guest on that said there were three tax buckets. There's a pay now tax, a pay never tax, and then a pay later tax, right? So when you look at tax planning from retirement planning, the two most, I guess, used tools would be a traditional or a Roth, rather it's an IRA or 401k. So one, the Roth means that you pay your taxes now, right? And then the traditional means you pay your tax later, okay? So you have to determine which way is going to save me the most money in taxes. Paying it now at a maybe tax bracket of 20%, or paying it later at maybe a tax bracket of, I don't know, it depends on what your income is. That's the dice you're going to have to roll. It could be anywhere from 20%, maybe it's 30%. You don't know, right? So I always tell people to plan it in a manner where you know what type of income you're going to have coming in now versus later, for one. Also plan it with the understanding that inflation happens. It's a natural occurrence. What we're seeing today is not natural, y'all. This is crazy. 8.5% inflation. This is crazy. But inflation usually happens 2 to 3% year over year. And so because inflation happens, guess what? The tax brackets go up year over year too. All right. So understand that when you're thinking about which retirement instrument I should use to give me the lifestyle that I want in the future. Okay. Um, so a lot goes into that. All right. And so we had a question before I go further. Samurai says, so let's get back to this 14-day rental deal. Does this include renting your home on Airbnb? So when you use platforms like Airbnb, that probably opens you up to you doing it as a business. So I would not suggest that you do Airbnb unless you consult with your accountant. And we could definitely have a conversation, Samurai, on the best approach to using that. You definitely don't want to set yourself up as a business in order to take advantage of this deduction, because once you set yourself up as a business, and usually people that are renting their homes on Airbnb, they do it frequently. You definitely may be entering into that realm where you have to claim the income, right? So definitely connect with a tax strategist, yours truly, or your own accountant, so that they can work with you and make sure that you have that structured properly so you can take advantage of that tax savings. So Marie Mitchell says, how do you get to pay? How do you get to pay your tax? Never, right? It truly depends on the different investments that you made. So we had Sharon Mooney, I think that was her name, on the show, and she was definitely talking about some tools. Like index universal life insurance plans that help you fall into probably that pay your tax never bucket that she talked about. So that I would encourage you, Marie, to look at that video and definitely connect with Sharon, because hey, we all want to pay never, right? I personally don't know a lot about those index universal lives because I'm not an insurance agent. I don't sell insurance. But definitely connect with the professional so that they can walk you through strategically just how that works and make sure that you have the proper retirement plan or tool in your arsenal or portfolio so you can take advantage of that. So Samara says, that's a pretty slippery slope, Marie. You can ask Wesley Snipes how that works. Oh, he's funny. Okay, we talked about that a few weeks ago, right? We talked about tax evasion versus tax avoidance. So we're definitely not doing tax evasion here, all right? This is tax avoidance. These are definitely tools that you can use that are in the Internal Revenue Code, right? You just don't know about them. So Marie says that's great information. So again, y'all, you can definitely leverage the assets that you have in order to take advantage of some tax savings that you may or may not have known about. So I definitely know that some of these savings I have used in the past for clients and for myself, so I know that they work. All right, some of these are tried and true, but I would suggest that you always connect with a professional before you start trying to implement some of these strategies, because you want to make sure that they're done right, right? Because what you don't want to do is do it the wrong way, because guess what? Uncle Sam will audit you to be like, you can't do that. So definitely make sure you're connecting with a professional to ensure that, it is done right, and it is legal. We definitely do not promote tax evasion here. This is all about tax avoidance, which is a very legal approach of reducing your tax liability, right? So hopefully y'all have fun tonight. There was a lot of engagement in the comments, so I really, really appreciate it all. Thank you for our newcomer, Rochelle. Thank you for Kia for popping in, Marie, Samurai, Wayne, Angelica. I think we even had Dream World Media Group. So thank y'all all for popping in and getting some of this information. And so if you like what you heard tonight, and you want to continue to connect with us, we're going to share some information on how you can do that. But before we get there, we have a guest next week. So next week, we have a guest that is going to be walking us through, again, assets, right? And so we're going to have Katie come on, Katie McCarthy, and she's going to be walking us through assets. Are they really that important, right? That's the question that we have. So Katie's going to walk us through, how we should approach that. And she works with solo entrepreneurs. So if you are a solo entrepreneur in the audience, you definitely want to come back to hear Katie's approach to assets. Are they really that important? So she's going to walk us through, what assets we should be using, I guess, as entrepreneurs and as our individuals, and all about that timing thing too, right? And she's probably going to share some real life experiences. I had the opportunity of talking with her prior to her coming on the show. She's definitely what has an inspiring story, and I would love it for her to share. Hopefully she has time to share that on tonight, on next week's live, right? So make sure that you tune in, okay? Also, Some of these tips that we shared, and I know we don't have a slide for this because I'm just off the cuff, but some of these tips that we shared tonight, I actually do a deep dive into a class that I created. It's a tax planning course that I created. It's a 7 weeks course, and we go through each of these areas, right, as they pertain to taxes. So we cover like business, tax planning around businesses, retirement planning, health savings credits, other credits that individuals and business owners can take advantage of alike. So please make sure you visit our website, www.fyefinance.com, so that you can take advantage of that course, right? We also will do week over week connections where you can ask me questions, right? You get me for a whole hour. You can definitely ask questions. We can do a deeper dive into whatever you covered from previous week's class. So I want to promote that, especially today, because, as the year continues to progress, the further we get along, the less time we have to implement some of these strategies and get them set up properly before the tax season hits us again. So I wanted to make sure that I start pushing that initiative because I absolutely want you all to be able to leverage the assets that you currently have in order to generate those huge tax savings. Okay. So if you like what you heard, hey, you can connect with me. So right here on the screen, you can see that you can book Samara. All my consultations are 100% free. So you can connect with me in a tax consultation or an accounting consultation. And if you like this information and you want to stay in the know, make sure that you are subscribing to our YouTube channel. So if you are in YouTube right now, if you're watching us on YouTube right now, hit that like button, hit that subscribe button so you can continue to get this good information week over week, right? You don't want to miss out. And watch some videos and replay while you are there, okay? Also, know that our podcast is streaming on multiple platforms. So we are on Audible, Spotify, Amazon Music, and Apple Podcasts. So while you are at work, typing away at your computer, or you are driving to work or on your way home, definitely make sure that you listen to us, right? This is good listening material. I don't put y'all to sleep. I keep you up. You're interested. So Dream World Media says, book her, please, people. She knows herself. Thank you, Dream World Media. Another client. I love them. The Prathers are beautiful people. I'm so glad God connected us to them. So definitely, thank you all for tuning in on tonight. It has been a privilege and an honor, and I hope that this has helped you, right? So I'm going to give you back the rest of your evening. Y'all go and encourage someone to look at this video, right? Share this video because we definitely shared some strategies and tips that maybe people had not heard of before. Definitely that rental property one, right? So until next time, FYE Finance family, I love y'all. You'll all have a great and blessed Tuesday evening. And until next time, we will see you soon.